Hola mi gente, welcome back to the channel. This is Sean and this is We Are Investing. Let's discuss Wish stock because I have a position in this stock that I'm actually going to be closing. So what I want to do on this video is I want to explain the trade I made in Wish. I want to go over the process, the steps I took to get this trade, and why I'm closing out of my position. Now before I enter into any position that's going to be over at least a couple of months, you have to do serious due diligence. This isn't a quick swing trade. This isn't a day trade. So due diligence is required. It was on July 27th of this year that I uploaded a video regarding Wish stock. The title of that video was Wish stock, pure hype or 10x. We did a deep dive in the company. We took a look at the fundamentals and the financials for this company to assess if it was a good investment at the current price. During that due diligence, we found out, or I personally found out, that I did not like the stock and I thought it was severely overvalued and I thought it was pure hype. So what I did after that is I entered into a bearish trade. A bearish trade is when you make money when the stock goes down. You think it's not at a good price and you think it's going to go down, so you benefit when you enter in a bearish trade if you are right. This was a very simple trade. All I did was buy put options. This is not like shorting a stock. Your risk is limited. But you can get even fancier. You can do a call credit spread or you can do a put debit spread. There are multiple ways that you can be bearish on a stock. And just because you're bearish on a stock doesn't mean you should enter into a trade either. You have to really believe that the stock is going to tank, which is what I thought was going to happen with Wish. The reasons why I believed that was because the fundamentals did not support the current price. And I thought there was a lot of hype. There was heavy volume in Wish. It was mentioned a lot in social media and a lot of traders were in the stock. The key word here is traders. They don't stick around for a long time. So if your timeline is longer than theirs, there's a good chance you can make money because once they flee, there's going to be bag holders and the stock is going to drop a ton. But with that being said, timing is everything and you need to be patient. When I entered into my trade, I did not get instant gratification. I was down a ton because the stock continued to go up. But I set myself in a position with a put option that wasn't going to expire for quite some time, that I could wait it out. And I was okay taking a loss up front because I didn't know when the stock was going to drop. I just knew that the stock was overvalued, or that's what I believed. So I waited it out. I was patient, and then finally traders started to leave. The fundamentals started to matter again. Valuation started to matter. And now my position is up around 120%. I didn't go huge in the position. I only bought 3 contracts. I put less than $600 in this trade. But now I am up to $1,200 and I am locking in profits because I think the trade has done what it needed to do. Now the key takeaway from all of this is that you will not get instant gratification in all of your trades. A lot of people do not hold on to stocks if they do not get instant gratification. I want you to take a look at your portfolio and look at the stocks that you're green in and that you're actually been holding for quite some time. Was there ever a time in that stock where you were down 20, 30%, you held through it, and now you're up on that position? A lot of people are going to say no, because when they're down that much, they sell the stock. If you have done the due diligence and you have the conviction behind your investment as a long-term investment or a trade that's going to be over many months, you can be down a lot in a position and it can change course really quick. So believe in yourself. And if it doesn't work out, sometimes it's not going to work out. Rather than saying that was just a bad trade, try to figure out what you did wrong in your analysis. Understanding how to analyze a company, how to analyze a stock is more important than being successful at the start, because you are going to learn the most from your mistakes. When I started trading and investing in the stock market, I made a ton of mistakes at first. And that is how I learned what I'm good at, what I'm bad at, what I should avoid, and what I should do. It takes time, it takes patience, and that is why the earlier you start, the better it is. And it is never too late to start investing in the stock market. So from here on out on this video, what we're going to focus on is what I pointed out in Wish and why I thought the stock was severely overvalued when we first initiated coverage of this stock. Now, before we do that, and we're going to do that all on the computer, please consider hitting that subscribe button, ringing that bell, and smashing that like button. There's also an exclusive promotion for WeBull. WeBull is a great brokerage, and this deal is stellar. If you open an account with WeBull, you don't have to put any money down. You're going to get one free stock worth up to $300. If you put $1 down or any amount down, you will get another free stock worth up to $2,000. So you can potentially turn $1 into $2,300, and it's just opening account. There is no contract. It is just a brokerage where you can search stocks, where you can search fundamentals, financials, the whole 9 yards. We're gonna do everything from here on out on WeBull in this video so you can see the power behind this brokerage. A link to that exclusive promotion that ends at the end of November is provided down below in the video description. All right, we're in WeBull right now, and we're taking a look at the chart for Wish. Now, when I started that put position that we're up around 120% on, the stock was trading at around $10.50, between $10 and $11. And it actually ran up to $15 after I initiated that trade. So I was down a ton. But then, as you can see, with patience and time and proper due diligence, the stock really dropped and currently is trading at $4.39. And that's part of the reason why I'm closing out of my position, because the stock is really beaten up right now. I don't wish that Wish stock goes to $0. I'm happy with my gains and I'm not going to be greedy here. But I want to show you some of the reasons why I got into this stock and why I'm actually selling right now. So in WeBull, you can hit the analyst tab, and on your phone, you can do this as well. And you can see that there are 10 analysts that are covering this stock. Now, this is a very powerful tool. It's very quick, but you should also look at tip ranks to see when these coverages were initiated, when the price targets were initiated. Tip ranks will also give you the name of the analyst. But the low range is $4. We're close to that, so I think now is a good time to take profits. Another very powerful thing with WeBull is you can take a look at the financials of the company. You can take a look at the income statement, the balance sheet, the cash flows. There's so much you can take a look at on this brokerage on your phone and on your PC or your Mac. Now, what we're going to take a look at is the annual income statement and why I thought this stock was severely overvalued. There's a few things that I really did not like with this stock. The first thing that everybody wanted to talk about was revenue growth and how it was so impressive that the stock went from $1.9 billion to $2.54 billion from 2019 to 2020, representing around a 34% growth in revenue. There are two factors to consider here. The first is COVID and how that sped up sales in e-commerce. 34% is great growth, but it's not that impressive when the whole country is in lockdown and everybody's buying things online. The next thing that I did not like is that total revenue is $2.54 billion, but the cost of revenue significantly increased. It was $947 million. And we also had marketing and administrative expenses at around $2 billion. That's basically all of revenue. And that's how come the net income of this company was negative $744 million for the fiscal year of 2020. Those were severe red flags in my personal opinion. The company's cost of revenue went through the roof. They were still spending a ton of money in marketing, and net income was moving in the negative direction, meaning they were losing more and more money each given year. Now, something that I covered in my prior video was the fact that everybody was talking about the logistics portion of Wish. But the interesting thing with that is that the cost of revenue for the logistics side of the business was astronomical. They weren't really actually doing anything. They were just finding drivers for you and taking a small cut. That's why the cost of revenue was so high, and it was almost a fake boost in total revenue because it wasn't really a business that I thought was making the money, at least not at the time. Another reason why I was bearish on this stock is because management was changing, and you don't see management change when things are going well. The CFO and now the CEO of this company has changed, meaning something was not going right. And as you can see by the financial statements, it's obvious that this company needs help. Another thing that we looked at once we figured out the income statement is we took a look at the balance sheet. The cash and cash equivalents seemed pretty good at $2 billion. The total current assets, $2.31 billion. The total assets, $2.4 billion. And the total liabilities at $1.37 billion, with pretty much all of that being current liabilities at $1.33 billion. The issue that I had with the balance sheet wasn't the ratios between assets and liabilities, wasn't the fact that they had $2 billion in cash. It's the fact that in the income statement, the net income was negative 744 million US dollars. So what's happening in the balance sheet right now, that $2 billion in cash, that's going to get eaten up pretty quickly. And also, this company got a lot of cash from its IPO. So it's not like they're just going to be able to continue to bring in cash in the company unless they start offering stock, which would just increase the valuation and make my bearish case even better. So after I did my due diligence, I found out I did not like this company, thought it was overvalued, and I also thought there was a lot of hype with traders who would eventually leave the stock. I thought this was a good candidate to buy puts. And that was my personal thought process and wish. I went against the grain and I was rewarded this time. Okay, thank you so much for sticking around to the end. I really do appreciate it. If you like this channel and you like investing in the stock market, then please consider joining our Patreon. It gives you access to a Discord server of over 500 investors where I and the other investors are chatting every single day. If you ever have a question, if you ever want to share your knowledge with other people, if you ever have a question, if you ever want to know what we're trading, that happens in the Discord and the private Patreon. It is in the Patreon where every single weekend I provide a PDF of the top stocks for the upcoming week. A link to the Patreon is provided down below. But with all that being said, it's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya!